Historically, stainless steel driven demand cycle will now shift towards electric vehicle demand cycle. And so I think that will be the key in the transition to a new driver for the supply and demand dynamics of nickel, including price.
Please join us for our next live stream,
Sunday, June 27th
at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be
Sunday, June 27th,
9 p.m. Eastern. See you then.
Good evening, everyone, and welcome to another edition of SBTV Silver Bullion Television. I'm your host, Stephen T, and today we have a very special guest, Anthony D. Milewski. He is the chairman of Nickel 28, and it's a battery metals investment company with a focus on metal streaming and royalty agreements, including a management portfolio on development and exploration projects across Canada, Australia, and Papua New Guinea. He's a former Fulbright scholar with a focus on Central Asia, and he's also the non-executive chair at Giga Metals Corporation, as well as a director at Highlands Pacific. He was also specially invited to join the LME Cobalt Committee, having been named as one of the most influential people in mining by the Mining Journal. Anthony, that's an incredible CV to kick off there. Welcome to SBTV. How are you doing?
Hey, Stephen. I'm great. Thanks a lot for having me. I appreciate the time this morning.
Now, Anthony, we'll be focused on nickel today. And to begin, mining.com reported last month that the EV metal index jumped 85% in a month, despite nickel and cobalt's price drops. And you once wrote for Benchmark Minerals, the information provider, that nickel was the quote-unquote forgotten metal. Now, despite all these price drops, is nickel really the forgotten metal?
Well, you know what I meant by that is when people think about the green energy transition that's underway right now, a lot of times they focus on lithium and cobalt and copper, but oftentimes, people forget how critical nickel is for these batteries. And so, you have that aspect of the demand that's coming in from the batteries that people don't always think about.
Because you've also mentioned in an interview that you believe the nickel chart will sort of resemble the palladium chart eventually, because at Silver Bullion, we're very interested in metals of all kinds. And it's interesting that you mentioned it. Could you expand on that?
Yeah, I mean, what's interesting about the nickel market is today that market is primarily driven by the stainless steel market. And, if you look historically at nickel projects, they're all multi-billion-dollar projects. In particular, in the last cycle, what happened was people went out and to try to build these HPAL projects, high pressure acid leach. And in some cases, these projects were billions and billions, $5 billion over budget. And it just destroyed the investment of people. And so you have this moment where no real nickel mines of any note, greenfield projects have been built now in over a decade. Projects have been finished that were started in the last cycle. But you have a burgeoning demand, which it was kind of unforeseen as little as a few years ago. And that demand is the demand for nickel to play a critical part in the batteries. And so it's kind of a complex situation with, a dramatic increase in demand in the coming years on the one hand. On the other hand, a pipeline of projects which just isn't there.
It's so interesting that you mentioned HPAL and the demand side, because we're going to get to that later in the interview. Just very quickly, Anthony, Class 1 nickel, as many of our audiences may be aware, is the key ingredient in the lithium-ion battery, which you're talking about, the EV batteries. I'm just reading a couple of quotes here. It says, Elon Musk said the lithium-ion battery could have easily been named a graphite nickel battery. And the Globe News Wire reported that nickel is the key in achieving high power for energy density to increase battery range. Here's the double-barreled question, Anthony. How critically do you think nickel's future is tied to that of EV adoption? And if EVs are to become the primary mode of transportation globally, will this eventually change the dynamic of the nickel market in terms of demand and the load?
Yeah, so I mean, it's not. Let's put it this way: if no one bought another NCA battery, there's a nickel-based battery, it wouldn't harm nickel in the sense that nickel today is really a stainless steel market. I mean, that's the market. What changes for the nickel market is as people buy these electric vehicles, they become hooked on a nickel battery. And so you have a completely new source of demand, which will change the dynamic of the industry. So historically, stainless steel driven demand kind of cycle will now shift towards electric vehicle demand cycle. And so I think that will be the key in a transition to a new driver for the supply and demand dynamics of nickel, including price. And what we're seeing today is the need for a market signal to build more nickel projects, and we've just not seen that yet. In other words, you need a higher nickel price in order to incentivize companies and funds to take the risk that's required to build these massive multi-billion-dollar capex projects, kind of spread around the world.
Just a quick segue into battery chemistries for a moment, because I want to get you on price in a moment, but turning battery chemistry before we move to that, how important was it for the EV industry to move towards a nickel-rich 811 cathode system, 8 parts nickel, and the shift to 811, was that a watershed moment for you, in your opinion?
Well, they haven't done it. I mean, but by and large, that shift hasn't taken place. It will take place. It's taking place, but it's not yet there. And I think the key driver there is cobalt. You saw volatility, cobalt having a range over a relatively short period of time from $8 to over $40, $44. And so when automakers are thinking about their costs and they operate at such a thin margin, that it's hard for them to get their head around the ebbs and flows of a commodity market. And so part of that shift was really around, reducing the cobalt. And I think, also not to digress here, but, the cobalt market is really a DRC market, and globally cobalt comes out of the Congo. And so in addition to having commodity risk, you also have like the geopolitical risk associated with cobalt. So that transition to the 811 was driven by cobalt. I would also note that the narrative in the market, which I believe incorrect, is that all batteries will be NCA or NMC, these nickel-rich, nickel, cobalt, aluminum, nickel, manganese, cobalt batteries. What is evolving is that you will have an LFP battery, which is a lithium iron phosphate battery. And if you live in a big city and you don't drive your car more than 20 or 30 miles a day, like that battery is a highly useful battery. It's dramatically cheaper and it's a little heavy, but I think that what we're seeing transpire here are different batteries for different use cases. And that's only going to continue to accelerate as we move forward through the cycle in the coming 5 and 10 years.
At the current rate of EV growth, if we assume 30% of new car sales projected to be electric by 2030, demand for nickel supply should be going up. However, Ken Hoffman of McKinsey, I think you were with him as a fellow keynote speaker at the recent Global Mining Symposium last month. He raised issues about a coming nickel supply shortage, especially in a post-pandemic supply chain scenario. As someone who sits on an LME committee, Anthony, do you concur, with the shortage concerns, and will deficits at the LME level continue, as some have argued, even all the way to 2025?
Yes, I actually recently stepped off the Cobalt Committee, but notwithstanding that, I would just say that the price dynamics, the supply-demand dynamics in nickel are rife for a major spike. And, it's hard to know when that will come, but I do think that the longer that the price kind of stays where it's at, the more dramatic that spike could be. Now, there is one potential risk, or at least one thing worth talking about, is Tianqin, who in the last cycle kind of revolutionized nickel pig iron, has put out news, and this is really why you see a ceiling on the nickel price right now, saying that they're able to convert nickel pig iron to nickel matte, which is what's used in batteries. And so the market is kind of taking a wait and see approach. Now, if they could actually convert, which is just really energy, nickel pig iron to nickel matte, that would mean that all these mines in Indonesia could then start to produce in nickel matte. And we won't go down the path of like, what about the fact that they're dirty and that they have a huge carbon footprint, but just focusing on costing. But the way that price of conversion from nickel pig iron to nickel matte, which by the way, Vale also knows how to do, is looking is, you still need a couple dollars to the nickel price from here in order to make that work. And so I think the market is really, and the reason it hasn't really gone like copper has to all-time highs or close to it, is the market is kind of sitting back and watching to see what happens with this conversion from nickel pig iron to nickel matte.
Can you help our audiences understanding this? Because class 1 nickel is the best. It comes from mining nickel sulfide, which is a certain type of very precious ore. Mining that is one process. Class 2 nickel is from laterite ore, but converting nickel pig iron or class to nickel into nickel matte is yet another process, and it costs twice the price of nickel to convert. Anthony, are we right in understanding it in that way?
Yeah, I mean, I think in a basic form, these mines, these are like digging mud out of the side of the hill and then cooking it. I mean, it's pretty tough. I mean, it's pretty carbon intensive. And then once you have that nickel pig iron, you're then once again running another process whereby you're converting it and taking out impurities and creating the nickel matte. Now, I would note, you're not capturing cobalt in that case. It's one of the things you're not capturing. So, a unit of a commodity is a unit of commodity, but to get it to a form that you can use in a battery, you need certain purity levels, you need a certain form, and it's just really expensive to do that today from nickel pig iron. And so I think what Tianjin did to the market is they said, oh, we can do it and we can do it cheap. Like, well, yeah, of course you can do it. Everyone knows you can do it. Valley's been doing it for a long time, but can you actually do it cheaply? And I think if it proved that they could, I think this would be the nickel price, right? Until the demand really hits. But a more likely scenario is that they can't do it cheaply. And then the market will really react. I would also note that as the automobile companies become more focused on the decarbonization and being net neutral, converting dirty nickel pig iron into nickel matte, problems of just carbon emissions become huge. And I think that could also be a problem. You don't want to be an electric vehicle company having this massive carbon footprint based around that conversion. So I think that's also a conversation that happens later in the piece.
Right, because we know you're a big environmentalist, and you've been big on decarbonization. We'll get into that maybe later in the piece, but just very quickly, you were saying that basically HPAL could come in at this point in time where it's sort of the third way, isn't it? Where it comes in as another process to take it to maybe 3 nickel mining processes in that sense. Are we right to understand that?
Well, the problem with HPAL is HPAL in the last cycle was kind of like, well, first of all, the first and foremost, a nickel sulfide ore body is the easiest to process and the most straightforward and the lowest capex. But there just aren't that many high-grade nickel sulfide ore bodies available to mine that aren't already being mined. So the next step in this process was HPAL. And last cycle, any number of HPAL projects came into production, and many of those were billions and billions of dollars over budget. And so it's pretty hard to see outside of China, where the cost of capital is different, and Chinese, semi-sovereign companies have a cost of capital, which is just whatever China says. Outside of that, it's very challenging to see Australian or Canadian projects being built especially the HPAL projects being built until the nickel price is dramatically higher. Now, inside of Canada, there are a handful of nickel sulfide deposits, one of them being Dumont, which Waterton owns. Goldman is reportedly running a process on that. Another one is Turnagain. And then, there's a handful of others. So those are nickel sulfide projects. I would argue that once again, to achieve an IRR that competes with tech and other available investments at the moment, you still need a higher nickel price to really incentivize the market reaction to build those.
Yes, because I want to get into incentivization, because you're actually a part of Giga Metals Corporation's investment into, like you said, in your country, Canada, the Turnagain project in BC. And that's one HPAL development, which I've just got a quote.
That's nickel sulfide. That's not HPAL. That's nickel sulfide.
Nickel sulfide. Right. So that's not a HPAL, because some people have called it. There's a quote here that says it's one of the best HPAL mines around. Is that actually inaccurate?
Yeah, that is inaccurate. I think they might be referring to Ramu. We own a stake in Ramu Nickel, which is the largest producer of MHP in the world. MHP is a mixed hydroxide, which goes into batteries. And that is the best operating, most efficiently operating HPAL project in the world. And it's I think it's because the operator, MCC, who operates that mine as a partner, has done an amazing job making that work in a way that other people have struggled to do.
So that's the MCC from China in the joint venture. And that's part of your royalty stream, isn't it, Anthony?
Yeah, in fact, that's our core asset. That's really the reason we bought the company today. And then the balance of the royalties is about optionality. But they've been a really great partner for us, and they are fantastic operators.
I wanted to get another flip side to this, because you mentioned elsewhere that HPAL also has the potential, and this is the quote, to destroy value in mining.
What happens is you take these ore bodies, you dig them up, and you do these tests, and they do them on a really small scale. And when you're talking about heat and pressure on a large scale, that globally they've found that is very challenging to ramp up that process. And so, in the last cycle, billions upon billions, maybe even in the neighborhood of $10 to $20 billion of value was destroyed by CapEx overruns at all these different projects around the globe.
I just want to ask you about those cost overruns, because and tie it a bit to you saying that there aren't any new or significant new mines really being built. I mean, nickel mines, that is. Would you say that the level of investment coming into the nickel mining space is seemingly, ostensibly, non-commensurate with the demand held by, as you said, the automakers and the EV giants who want the battery metals to be, they want to advance?
Yeah, I mean, they kind of don't match up. I mean, if you have the view that 50% of car ownership in the next decade is going to be electric vehicles, I mean, man, where's that stuff going to come from? So I do kind of agree with that notion that if we are going to electrify, not only, by the way, cars, but our houses with like the Tesla Powerwall, that somebody better start building some nickel mines and soon, because if you start building it today, it's going to take years to build it and ramp up. So take Dumont, which is shovel ready, the Waterton project in Canada. Like if they started building that today, it would be, if everything went right, it would be 3 years. So 2.5, 3 years, right? So, man, that demand curve, depending on how it looks, could really dramatically impact nickel price, which is kind of what I was saying, is when that demand hits, if we have to wait around a couple of years for new mines, in the interim, it could really spike.
It's because to follow on from what you're talking about pricing, one of the investor questions that we often get is, there is this idea that if, we talk about silver for a moment, we always deal with silver at Silver Bullion. They say silver is priced in a sort of inelastic sense. But what will happen if we have alternative battery chemistries coming in? Will people then go, when the price goes up for nickel, will they go and shift to viable nickel alternatives?
Yeah, will there be
like
substitution?
LFP?
The question is, will there be substitution? And I think it kind of depends. If it spikes up and it doesn't, kill the margin, maybe not. But certainly, one of the traps here is that there's a whole process around ensuring and coverage of these batteries, because they can catch fire. So when you talk to an automaker, they're looking 5, 6, 7 years out. Like when they already know what car they're going to make in every single part for years into the future, because of the whole industrial process of just building a car mechanized process. So it's pretty challenging to see how they can just replace that overnight. Now, there are things like you could buy a car that has an LFP battery, which is a different chemistry, and it would have a shorter battery life. Your range would be much shorter. But if you want a Tesla and you want it to be able to drive a couple of miles, then you're going to have to get a nickel-based battery. And there's not really a way around it. So that either is going to cost you more, or you're going to have to wait for that incentive price to bring on more supply.
It's interesting because, Anthony, it seems almost that we are not fairly bullish towards nickel, which is in fact the reverse. You're actually pretty bullish towards nickel. But we're saying that you're saying, in effect, that if we still see Tesla going out there, they've taken up an advisor in the Goro mine in New Caledonia, the one that South American mining giant Vale sold off.
Well, by the way, a mine that was like $3 to $4 billion over budget,
Cost overruns.
Yes.
Now, are those costs? Sorry to interrupt you, Anthony.
But no, I was just saying, I mean, that's an example, a great example of a mine that was multi-billion dollars over budget.
Right. So, I mean, are these cost overruns in nickel mining due to the very thing you were talking about earlier, that conversion process?
No, they're due to the HPAL process, which is very hard to get right. Heat and pressure, in an ore body, because remember, like an ore body, it doesn't matter whether it's nickel or anything else, it's never the same all the way through, right? And so the grades go up and down, and that process is just exceptionally challenging to get right and to scale.
Because I think this is important for the audience to understand. You're actually it's not confusing for us. I mean, it can be for some people who are not familiar with HPAL, but are you saying that HPAL is in fact actually feasible, but it must be rolled out in an efficient, effective way, and nobody's actually perfected that yet? That would dovetail what Ken Hoffman was saying. If it can be rolled out.
Yeah, I mean, I would say MCC is perfected. They've done a great job of RAMU, but all things being equal, if you had to build a nickel mine, you would prefer that nickel mine was a nickel sulfide ore body, because then you could manage your capex, you could manage that. So I think what you would see is that desire, and that's why Dumont, and some of these Canadian projects have a real shot, depending on what process these. Turnigan's another. I mean, Turnigan's a little bit earlier, so they've got stuff to do, but it's probably why the Australian projects are far less interesting, because those HPAL projects would be more commensurate with the projects in the last cycle that had such large cost overruns. So if I was an investor and I was asking myself, I wanted to invest in some speculative name, I would say, is this, and what type of ore body is it? And I would be much more inclined as a speculator to buy a name that was a nickel sulfide, because a major might buy it. There's potentially more action there than a nickel laterite, which has the HPAL process to actually bring into production.
Right, I think that was important as well for our audience to understand that nickels, you've got class 1 nickel that's used for EV batteries, class 2, which namely it was mainly made up of the stainless steel market. But the class 1 nickel is usually mined from nickel sulfide, whereas with class 2, a lot of it comes from laterite ore. And to do that conversion, can I go to nickel matte or go to HPAL? Are we right to understand that is the way of things?
Well, we have an HPAL process at RAMU, and we produce, an MHP. So it's not that HPAL can't produce an MHP or a or a product that can be used in batteries. It's just to get there, to actually build the mine and create the process is very hard. Once you're there, if you have an HPAL, you can do it, right? If you can actually put an MHP facility there, or do what we're sort of doing at RAMU. But it's more taking that ore body and then processing it. And the nickel sulfide, on the other hand, just technologically speaking, it's much easier to control for costs and to actually create it. Because remember, at the end of the day, if you have an ore body, a nickel ore body, you can produce any kind of nickel you want. You can produce an MHP, you can produce class 1, you can produce anything you want, basically, in general terms. It just might cost, depending on the predisposition of the ore body, it just might cost a lot more to produce that other thing. And so to distill it down for a speculator, I would just avoid non-producing HPAL projects, because I think those ones are less likely to come into production if it's not already in production. Because if it's in production, you kind of know it's some cost. Not in production, I would look at nickel sulfide projects.
There's a bit of a paradox that I'm just wondering about, maybe some of the audience might be wondering about as well. We see Tesla willing to go in and procure nickel or look for nickel sourcing, and yet people are coming out selling off these mines. Could you help us understand? Nickel is in demand. There is no doubt about that, isn't there?
Yeah, no. I mean, if you were Vale, how many $1 billion did you write down? And by the way, Goro's in New Caledonia, which they're having all kinds of problems, political problems, and so it's just time to move on. And Ravensthorpe in Australia, Mbatavi, all these
Madagascar, that
just had such they had such a tortured history, and they've all been for sale. I mean, Corez, I don't know if they've sold it or if it's for sale, but they've been all these groups have been trying to get out of the Mbatavi project, for a couple of years. You've got Goro, which still hasn't closed to my knowledge. Ravensthorpe was for sale. They ran a process. The bank ran a process. So these things are not easy. They're not easy to operate. They continue to have ongoing challenges. And so I would say that with the exception of Ramu, which has been operated by MCC, it's been a challenge to make these things work.
Earlier this month, Roskill put out a report, and this was also backed by McKinsey's Ken Hoffman. I don't want to keep quoting Ken Hoffman, but both of whom were highlighting that nickel production companies in China like Tsingshan, who run the Morowali mine in Indonesia, they're saying they have the ability to actually disrupt the market. Anthony, is that a misconception out there? Is there a misconception out there, I should say, that new tech announcements claiming to increase the supply of nickel matte or even, class 1 nickel on paper, can there be a danger that that's potentially seen as a strategic nickel price manipulation move? Hate to sound so sinister, but we're just wondering.
Yeah, I don't believe it. I think it's very hard to manipulate for more than a short period of time in massive market. So I think they're trying. I mean, I think, and in fact, like you can convert, they are converting and have been. It's not a new technology to convert nickel pig iron to nickel matte. That's not new. And it's confusing sometimes. I think what the real question and discussion around is what is the cost of conversion? And then the secondary question is like, what is the environmental footprint of that conversion? So the environmental footprint is a disaster. I mean, that's just a complete disaster in terms of like the carbon footprint around that conversion. Now, what we don't know is what is the cost of conversion, and depending on who you talk to, that's a couple dollars. So you got nickel, give or take $8. You need $10 or $11 nickel. So I think the wild card, as I said, that the negative or the downside potential in nickel would be if they were able to do that conversion and do it really cheaply, because then you would have plenty of nickel in the form of nickel pig iron. You'd have to get over the environmental issues, but it would be there. I'm skeptical. I don't think they're going to be able to do that cheaply. I suspect that it's going to require, we're going to need a couple more dollars on the nickel price to incentivize the production that we're going to need in the coming years.
Because you can understand the caution in the investor sentiment in that sense, because they're wondering whether there's going to be this oversupply. But you're saying that shouldn't actually be the consideration. I mean, that's not the only chief consideration, because the demand for nickel is a more long game. Yeah.
Well, it's not just that. It's, I don't think the market would instantly go into oversupply, but it would probably impact the nickel matte market. But what I would say is, and what's not being taken into consideration is Tesla, by way of example, prepared to buy a nickel matte product vis-a-vis the battery makers for an incredibly dirty nickel product. I mean, this is pretty dirty stuff. And so there's that layer of ESG and carbon that is also relevant and becoming more relevant almost daily. And I think it also brings into question that new supply that is possible to come out of Indonesia.
Because I want to get to ESG right at the end there, but just very quickly, staying on one last final question on nickel price mechanisms, Anthony, because assuming for a moment that nickel continues to do well and the EV boom and demand goes into overdrive, as some have been projecting for the next decade ahead, if nickel were to double, hypothetically, from today's prices to say US dollars, $38,000 per ton, or dramatically hit its record high of 50,000 US dollars per ton again, will the industry be forced to look for alternatives? It's not like they can find the same results with other chemistries in terms of achieving charging range power.
If there was a dramatic move on the order of magnitude that you're talking about, mines would just get built. Turnagain gets built, Dumont gets built. I mean, all those mines get built. So you have a supply side response. There'd be a question as to how long that takes. But if there was that dramatic spike that you just highlighted as a possibility, what we would see is a supply side response, which is every commodity. Like, it's just the same dynamic as every commodity. And one of the reasons for the spikes is just the lead and lag time around building a mine. So it's my view that you would see Canadian nickel mines get built this cycle if you saw a dramatic price increase in the order of magnitude that you just kind of highlighted.
Are you projecting some kind of dramatic turn of events like the one that I've just mentioned earlier, the scenario?
I don't know. It's hard to forecast price because price is just a number. And what I find in commodities is like it becomes irrational when it starts to move, and then it kind of finds a new base. But I would say that it would be a pretty wild ride if in fact the demand for electric vehicles meets expectations.
Just quickly switching to silver for a moment. Silver is said to be priced in an inelastic sense. We've talked about that earlier. Well, that's because the amount of silver needed for industrial use in each project is relatively low because they don't use large quantities of it. So manufacturers will still use silver when its price doubles. Do you think the same thing will be true for nickel if nickel were to double up in price? Is nickel as inelastic?
Well, I think I don't know exactly how much that would add to a car, but if it adds $5,000 to the cost of a Tesla, are you still going to buy the Tesla? I mean, I think that people will still continue to buy those cars, but if it actually doubled, which would be pretty dramatic, I don't really foresee that. But if it did, it would probably stymie demand. I think that's true. I think that's kind of always true, and you would see more. Probably more substitution, but I don't know that many people are calling for a double or a triple nickel price. I mean, that's a big call. I think instead what we're talking about is just a few dollars more than it is today, and that acts as a dramatic incentive to bring more production online.
Anthony, switching to the ESG topic that we were wanting to, well, you mentioned a few times decarbonization. We'd understand that you're an environmentalist, a big proponent of ethical mining, and we noticed you recently tweeted about decarbonization. What we see with the Kimberley process being called for in the diamond space, do you think that will come into the metals mining space as well? Is that a conversation?
We're already seeing it, like with LNG. I mean, you're going to be able to buy green commodities, and what that means is it's still very early days, but you're going to offset. Going to buy green copper. What that means is every metric ton of copper will be offset by a certain number of carbon credits such that that becomes green. So, I mean, that's inevitable. They're already trying to do it with LNG. People are talking about it with other metals. And I think that is an inevitability at this point.
Because there's another debate that people have been putting forward. They say one side argues that mining needs to be stopped if we're going to be ESG friendly. And then there's the old counter argument that, hey, if you don't have the mining industry to continue to flourish, to empower the change from fossil fuels to renewables, and to have homes install solar panels to mine energy and build a supercharger network, you're familiar with this argument. They go,
well, I don't know any serious people who want to end mining altogether, because if you want to live in a modern world, you look around the room you're in right now. Almost everything you see is either mined or grown, at its basic element. And so, I think what people are really saying is NIMBY, not in my backyard. But what people really are saying is they just don't want to mine in their, across the street. That's part of human nature. But if we're going to fly in airplanes and drive cars and have modern medicine and be able to get CAT scans, like mining's not going away. And I would venture to guess that most of the people who have extreme views around mining probably still want to get a chemotherapy when they have cancer, right? So I don't think it's going away. I will say though, I do think that there are mines that shouldn't be built. I mean, there was this whole thing up in Alaska around Bristol Bay and sort of the salmon factory of the world. Like, that mine shouldn't be built. If you're going to have a tailings dams fail. Everyone knows this. We can not just Vale, but Canada in recent years. I mean, there've been a bunch of failures. So some dams should not be built. I think this is 100% true. Probably for better or worse, we should focus on brownfield expansion in the sense that if there's already a mine there, the damage, whatever that may or may not be, has been done. And so by expanding it, you're at least kind of keeping it consolidated. But mining's not going away. We're going to have mines. It might be that we're just more thoughtful about where they're put. And certainly we need to be much more thoughtful about tailings and the type of tailings and the regulation around tailings.
Yeah, certainly. Here. Wait, the White House put out a sort of a press release on the 8th of June this year. They were saying the governments are now backing sort of mining in terms of get the right minerals, back them, because there's especially those that are pushing for sustainability models. The ESG model becoming more about social governance. Do you think new pools of capital even, they're going to have an ESG friendly mandate?
Yeah, certainly there are ESG friendly mandates, but you can spin it however you want, but I don't know that an ESG friendly mind. People are doing things like at Turnigan, they're talking about making a carbon neutral nickel product. At nickel 28, we actually completely offset the carbon footprint for the production. So those are some things that you can do, but at the end of the day, you are digging a hole in the ground and you're smashing two rocks together, maybe pouring some acid on it. And so I don't know that really ever looks like a great ESG investment. I think it's more doing the best you can in the face of something that's dirty.
Well, Anthony, we've taken a lot of your time. Just one final question. We'll just ask you, what is your outlook for the nickel market for the next year ahead?
I think the big moment here is LME week in October. Everyone will get together, whether that's virtually or in person, yet to be seen. And they'll really kind of debate and figure out what's happening with Tianjin and that technology, and is it working or not working? What's it costing? And I think if it turns out to be the case that it's not as cheap or inexpensive as they've indicated, I think you'll see nickel really kind of take a move up. And this is all kind of predicated on the global economy continuing to be strong and central banks continuing to destroy and debase their currencies while commodities appreciate.
Well, thank you very much for your time, Anthony. It's been a pleasure talking to you. Can you let the audience know how they can reach you and read about your articles and your news? You write for Benchmark Minerals sometimes. I
think the best way, if you want to follow it, is either on LinkedIn or Twitter. Try to post all of our articles and everything on those places. So feel free to reach out and just my name is Anthony Milewski, and you'll find me on Twitter.
Well, thank you so much for talking to us. It's been an absolute pleasure speaking to you, Anthony.
Thanks a lot, Steve. I really appreciate your time.
That was Anthony D. Milewski, chairman of Nickel 28. For more information about his work and his views on the economy, you can find him on social media on Twitter at the handle @A_Milewski. And you can also read his reports at www.nickel28.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. Do also check out the SBTV podcast on iTunes and Spotify as well.